Hi everyone, a massive warm welcome to today's Monday market update. As always, I've got some really interesting charts to share with you and some insights that we have from the Institute that we share with our premium clients. So I want to dive straight in and show you, of course, the Big Daddy chart, which is Bitcoin. I've gone down onto the 4-hour time scale right now because I want to show you the structure that's beginning to build, and I'm feeling quite positive about this move. To be honest, because we're seeing some strong higher low structure and strong higher high structure. And what I mean by that, just simply look at, forget what's happening on the left-hand side, this over here, the FTX collapse and issue and how the market's just trying to grind its way through it. Have a look at what Bitcoin's trying to do from, say, this point onwards. We have a low here, the higher low there, and we're trying to create another higher low here. And what's important as well, we're creating higher highs. So a high here, and this one over here is a higher high. So very clearly, we're trending up in this new positive trend. So higher lows and higher highs. Very, very nice to see. It looks to me like Bitcoin really wants to challenge that 17,500 area, which was actually the floor before the FTX breakthrough up here. So where were we in terms of that low? Over here. So 17,600, 17,500. Excuse me, that was the lunar low. So that is a supreme area of resistance now above our heads that we have to break. You can also see here it is confluent with the 200 4-hour moving average there as well. The 200 daily moving average is a little bit higher, but very clearly we've got some levels to break here, moving up into this channel. But so far, so good. Market looks like it wants to press higher and test out these zones above. It'll be very fascinating to see what it does there. If it runs into resistance, comes back down to spawn the channel, absolutely on the cards. Or are we going to hit up, pull back just a little bit, and then find our rocket fuel to go higher into the 18,000s, 20,000s. I'm not sure. Broader markets suggest we're probably looking for a larger bounce here, which is really positive. But right now, being in a bear market, we just can't be too sure. But what I do like on the, and if I just move this out of the way, here we go, on balance volume down below on the 4-hour, you can see consistently we're seeing volume steadily increase on the exchange. So it's exactly what we want to do in this Bitstamp, one of the largest South Korean exchanges. So I trust their data, and we just see those volumes begin to kick up. Again, that's what you want to see as price begins to move higher. If we just pivot on over to Ethereum, still a little bit in no man's land. It's in between, let's say, these two massive liquidity zones. So you can see here why they're liquidity zones. See how often the price has needed to smash through this to create a new trend. You can see here it's bounced into it there. It's fallen back through it, wick, smashed through it there, retested for support, smashed through it. So really big candles. This is the area where if it can be decisive through it, then you know we're in a new trend. Also down here, this is that lower level of the trend. Probably down here is that lower liquidity zone. We haven't really tested it again over here, which is interesting. So this tells me that Ethereum has actually been stronger than Bitcoin in terms of holding up because it hasn't created that new low. So that's really positive for Ethereum. Now it is trying to claw its way higher. If we just draw out the Fibonacci retracement, yeah, came back down, tested the 0.786, 78% retracement from the high. So swing low to swing high, then the retracement. That's actually quite positive. It's broken up through a descending wedge there, cracked up. Now it's approaching this higher volume support at 1,300. Look, we can get through here. Then it will be testing that $1,400 level around that 200 daily moving average. Ethereum will not be positive or bullish again until it can crack up above the 200 and it's above these volume areas. But after that, it gets into these range profile areas, range high areas. It will contend with that. But after that, it's got a bit of an open draw. So Bitcoin has a bit of room to recover here. Ethereum has room to recover. Same with a lot of altcoins. So just watch those levels that you've been pinning on, as well as watching those 0.786 levels as well, because they will provide or give you an indication of strength. If the crypto has recovered above the 0.786, then it's showing a bit of strength. If it's still below it, it still has a bit of ground to make up. So just keep that in mind. Where it's coming from now, this chart is a little bit noisy. I'm not going to spend on it too long, but this is the S&P 500. So for a very long time, essentially since Bitcoin was making those highs, we have been in a bear trend downwards. You can see the beach ball is just bouncing lower each time. The top of this ceiling, bang, bang, bang. Also the 200 daily moving averages, red line snaking through. It has provided a ceiling to this bearish action. If we can get above it, form it as a support and trend higher, bingo. The S&P 500 US stocks are actually probably going to have a large relief rally here. And what has it done just briefly? Well, it's broken out of this channel and it is now on top of that 200 daily moving average. Broke absolutely up through, wrecked a few shorts and longs here as it came back down and ripped back through the 200, but it was bought up quite heavily. Now it's above it and contending with this horizontal. Starts to get through this area here, it's going to create a bit of disbelief and wreck a ton of shorts to the upside. And then we're going to see a bit of a scream high as that leverage gets obliterated. So very, very interesting that US stocks actually are looking a little bit bullish here. And it has to be all on the back of the US Fed talking about how they want to at least scale back the interest rate hikes. And this is a market trying to price in that slowdown and a pause. A pivot, that's still down the line, probably mid-2023, 24, as the recession really starts to hit. But that hasn't actually been bullish if you look at the data previous. It's when they start cutting rates quite heavily and then providing direct stimulus is when we see that real pulse up. But there's generally a bit of turbulence during that period. Regardless, that's what we're covering with our mastermind group. I won't bore you with that today. All right, this is the overall crypto market cap. Wanted to show you the full capitalization of every coin here. If we remember back in the height of the bull market, we got up to about $3 trillion in market cap, which is pretty incredible. The next one hopefully should be around 10 trillion. That's all speculation. But right now, we're all the way back at about 700, 800 billion. What's really important about this, though, is we were at that 3 trillion mark at the highs, and we've had the full pullback, and we've gotten all the way back down to a little low 0.786. So I love the 0.786. You'd be surprised how many cryptos, once they've made a high or had an impulse high, how often they come back eventually to the 0.786 on the higher on the charts as well. So daily, weekly, monthly, if they come back to 0.786, generally that's a really, really good time to start getting interested as a longer term investor. We've had that bounce very clearly off that line, that blue line down here. We tried to hit it in June, couldn't quite get as far. You see we had the double hit down here. So that is really strong now that we're pulling back above it, above this key horizontal, back above the 21, and we're starting to move higher. So happy days on the broader crypto ecosystem trying to recover. All right, and this is from Michael Saylor. I really love this. So no force on earth can stop Bitcoin when the time has come. Now, a small caveat there, this is ownership of cryptocurrency on this chart, not just Bitcoin. So he's maybe being a little bit cheeky there, but this was a broad global survey of internet users aged 16 to 64. Worldwide cryptocurrency ownership, 12.3%. That is very, very big, and it will only continue to grow. If we have a look over here on the left-hand side, Turkey, 25.8% crypto ownership. This is a country with incredibly high inflation. Argentina, 25.2%. Philippines, 23.7%. So you're seeing a bit of a trend here. It's countries with debasing currencies, high inflation, looking to get out of the current monetary system because they cannot trust it. I also think this is what I just shared with the masterminds as well. This is a pretty good snapshot that people actually want stable coins, US dollars. If you don't want to be in the Bitcoin and highly volatile crypto space, you just want a solid savings mechanism or a way to just hold that wealth quickly, and that would be US dollars. And stable coins have provided that escape hatch. If you're in one of these countries, all you need is connection to an exchange and a smartphone, and you can just get US dollars straight away. If you live in these countries and do not have a bank account for one, or do have a bank account, it is incredibly difficult, if not impossible, to get your hands on US dollars, US treasuries, to try and hedge your risk in the short term. We can all speculate where Bitcoin and crypto might be in the future, but in the short term, especially in these countries with high inflation, you just need a currency that's not losing its value, within a few months, let's say, in a time frame. So keep that in mind. Sometimes in the West, we can have, that Western financial privilege where we don't really understand, or we think, currencies are trash, blah, blah, blah. That is and may be true in the longer term. Our currencies are all debasing to zero, but right now there is some value to them. We use them for daily goods to spend money and all that. In these countries, though, if we're talking about Turkey, Argentina, their paper currency is literally worthless. So it's an entirely different kettle of fish. They just want a spendable currency, or at least just to save a savings mechanism for the short term. So I just wanted to point that out. But regardless, this is a very strong trend towards crypto, and it is great to see. All right, before we finish up, guys, I just want to shout out to CCI because we are the top 3 highest rated educational institution in Australia. So that is really, really positive for us and anyone that's been with us. So thank you for leaving reviews. And for anyone watching this that isn't a client and just curious about what we do, read some of these reviews. This is on Trustpilot. They can all be verified. We have look at that, 4.9% average absolutely fantastic there out of 5. So, and that's over 114 reviews. Be a little while till we contend with this one up here, Skills Certified Australia, but really, really good start. And again, thank you so much for all the wonderful reviews. It means a lot to us. They put in a lot of work for the educational side of things and analysis. All right, as well, please make sure to check out, this is in the free group, it's also in the graduates group, 2023 crypto trends. We also cover this in our newsletter, and I'm going to be doing that this month, which is pretty exciting. Our top trends for 2023 and beyond. So that I'm going to do top 5 trends. Joe's covered them very, very briefly here in this video. So this is just incredible insight from Joe Shu there. He goes into it really, really well and quite quickly. I'll go into it a bit more depth in newsletter so you can really sink your teeth into it. Also, one more thing, guys, to shout out. Free premium newsletter access for a limited time. Make sure to click on this, enter this, and you can get that free access, because normally it is about $49 a month. So that is just completely fantastic if you can get your hands on that for free. So guys, thank you so much for your time. Hope you have a wonderful day. Keep leaving great reviews if you are a client and finished up the course, and just feel really good about where you sit after that. So again, thank you so much. Have a great day. Bye.